Japan sold for more than the US in 89. And it got to 65 times earnings, which means for every dollar of earnings, you have $65 of market value. And the US went to 35 in the tech bubble of 2000. You could argue, depending on how you do it, that it's 35 or 40 today. But it's not 65. So we have seen a much bigger bubble in Japan. And what happened? It went up and up and up. And then it came down for 20 years.
20 years?
20 years. They talk about the lost decade, but when you look at it closely, it looks more like a lost 20 years.
So for the average person, what do they feel and how does it impact them when there's a market crash like the one that you're forecasting?
The high flyers will lay people off, and a lot of people will feel less rich. And as you acquire money in the stock market, a small fraction of that, 2 or 3%, is spent. And in reverse, it goes back and people feel a little bit poorer. They spend a little less. So the economy tends to be under some stress.
So this is the point that is the most tragic of all of this, because when he refers to the high flyers, he's talking about the people who own these companies, the investment bankers who tend to actually do really well in these situations because they made the money already. They're the people who went in first. They're the people who sold you those stocks, those IPOs. And the tragic thing that he also mentioned is that typically retail investors, people like us, regular people, we don't sell all our shares. We hold on to it. So we probably would sell 3 to 5%. That's his estimation. What that means is as the stocks is rising, the benefit to us, the actual profit that comes into our pocket, according to his estimation, Grantham's explanation is that it's like 3 to 5%. And everything else is unrealized gains. That's the stock market. You don't make money until you actually sell the stock. Therefore, as you're riding high, psychologically, you're seeing your unrealized gain, the dollar amount in your stock brokerage account keeps going up, right? You see it's increasing $10,000, $15,000, $20,000, $30,000, $100,000. But when the bubble bursts, and in his estimation, we're in one right now, you actually have a significant drop in that income. And in his case, with Amazon, it could have been 90+% drop in the stock value. And the retail investor, people like us, are left holding the bag. Another interesting point that he mentioned is Japan and how it had lost 2 decades. And that's exactly what's happening right now in Chinese real estate. A report just came out a few days ago that states that Chinese property value has reset all the gain it's made in the last 20 years. What does that mean? It means that basically the value of the property today is what would have been worth in 2006. So in 2026, if you buy a property today in China, it's what you would have paid in 2006. A complete crash of that market. The people who've been holding the property for that past 20 years, they've experienced 0 gains.